characteristics, right? One, acts of support, or resistance. Two, price will return to fill the fair value gap. You know, that means that price will always return to fill that gap before continue the up move or the down move. And works fair value gap works on all time frame. Fair value gap works on all time frames, right? So this is a very characteristics of fair value gap. Okay. So also we will talk about the difference between fair value gap and inefficiency as imbalance as inefficiency, because it's not all the fair value gap that you have to pick an entry. Okay, I think this should be an important one. It's not all the fair value gap that you see on the chart that you have to pick an entry, right? So when this happens, something like this happens, right? Structure to the upside, liquidity close. So this fair value gap at this zone, this fair value gap at this zone is the valid one, right? In order to have a nice and a powerful fair value gap, always allow the price to shift to the upside or to the downside. So in this case, when you see something like this, then you can literally wait for this fair value gap. You understand? So this means that the price has already shifted to the upside. Now, you will literally wait at the fair value gap, keep your entry at this zone, then most probably you can keep your stop loss below this low. You understand? Then this is a very good example on how you can get a good entry using the fair value gap. First, the structure must shift. The structure must shift to the upside or to the downside. Then you have to wait for the unfilled fair value gap after the structure has been shifted. This makes more sense if you can wait for something like this. So in this case, in this situation like this, this should be something like this. Should be something like this. Should have been something like this. Price from the downside, breaking structure. Price breaking structure. Okay. Breaking structure. So supposing price break structure, then this fair value gap should be a valid one. You understand? So supposing this is the record structure at this point. So that means any retracement that retraces inside this fair value gap should be a valid one. You understand? Should be a very valid one. So uh, this is like an entry model for fair value gap. And also sometimes you will see the price doing something like this. See the price doing something like this. See the price doing something like this. Okay. See the price doing something like this. sweep of the low. Okay. Now, sometimes you will see the price creating a fair value gap at this point. At this point, you know, after an impulsive move to the upside, a very good candle, green candle pumping into the upside, then immediately you will have to see a fair value gap at this point. You understand? You will see a fair value gap at this point. But for me, I consider this guy as inefficiency. All right, I consider this guy as inefficiency. You know, it's not a solid one. All right, most probably the price can just fill here and continue going to the upside. You understand? But a very perfect area to consider as a fair value gap is after the price has shifted the structure to the upside, and then the fair value gap at this area should be considered as a very good fair value gap and entry model strategy. This should be considered as a very good entry model fair value gap, right? So this one here makes more sense, right? This one here makes more sense. This one makes more sense because um, the price has already been shifted to the upside. So most probably some traders will have to come into this zone to find the 50 zone, the 50% of the Fibonacci retracement tool. You know, then most probably they will have to find an entry zone at this 50%, keeping the stop loss right below the previous low, and then targeting the, the previous highs. You understand? So what they should be expecting the price to like retrace into this zone and fill at least the 50% zone, then and continue going to the upside. You understand? So this is a very good strategy because a lot of traders uses only fair value gap. A lot of traders uses only fair value gap like to trade mainly they uses only fair value gap. So but for me I use fair value gap as confluence on my trading edge. So I think fair value gap is just a small topic which we just have to understand the concept that it's all about a three candle pattern. Price will always go back to fill it up. It work as a support and resistance, stuff like that. So most probably, if for the bearish, a fair value gap, you can also consider this as a resistance because fair value gap also works as resistance. Then this one here, you can also consider this one as a support zone. You understand? And fair value gap works on all the time frames. You know, price always returning to fill back the gap before continuing the up move or the down move. You understand? So I think fair value gap is just you understanding the three pattern, the three candle patterns, and that's all. So I believe this fair value gap because I've been seeing you like using it already, but this makes more sense if you can like add it to your existing knowledge of fair value gap. Yeah, inefficiency is just like imbalance. All are almost the same thing. You understand? In some cases, in a bullish impulsive market. Okay, let me just in in a bullish market, you will see a lot of gaps, like a lot of imbalance. You understand? So this means you might see fair value gap here. You understand? Fair value gap here. So you will likely see a lot of them. You understand? But in my own opinion, the first, like the last fair value gap before the pump happened is always the most preferable one. Same thing goes to other blocks. Same thing goes to other blocks. You might see a lot of other blocks, waiting like in a bullish uptrend. But the other block, the first other block before the impulsive move is always the most, you know, uh, valid one. Okay, so the same thing goes to the fair value gaps. You understand? Because there is always lots of fair value gaps when the price is pumping to the upside. You understand? So for me, I will always consider the the last one that happened before the break of structure as the strong one. No doubt, the price can literally, bounce from here, to the upside, and also might literally come back to this other fair value gap and like bounce again, you know. But I literally consider the last one as the strong and mostly the premium one, that the price might literally pump. So a lot of people uses this guy as confluence, but for me, I just have to understand fair value gap. You just have to put your own understanding as fair value gap or the block, fair value gap or the block. Because in a very clear bullish market, okay, let me just find a clear bullish market. You will have to see that you have lots of fair value gap. Find a clear bullish market. You should be having lots of fair value gap. You go into 6 hour, all these zones. And then this is sold. And then, yes, and also, let's talk about one thing. Fair value gap will not be valid. Fair value gap will not be valid or is not valid if this candle one here like this. If this candle one here does something like this, and this candle three does something like this, all right? So it means that there is no gap. So it means that there is no gap. You understand? So this is not a fair value gap. Sorry, I this is not a fair value pattern. So there must always be a gap in between 1 and 3. So if the candle closes something like this is not a fair value gap. It means that the price has filled in already. It means that the price is already filled in already. So if this should happen, then I don't consider this guy as a fair value gap. So we should always uh, take a look at all those things because it's very, very necessary. So the fair value gap must always have a gap in between the candle one and the candle three. Okay, and the candle three. So something like this. And the same thing goes to the bullish play. If the candle closes, the candle one and the candle three have no gap, then I don't consider this guy as fair value gap. It literally means that the price has already filled in. You understand? The price already filled in, then for pumping to the upside. So this guy is let me find a live example.